out of quite a volatile week. Yes, we were ranged, but the span of the range from the high to the low of last week was quite a fair bit. Finally shutting shop at around that 25,850 thereabouts mark. So it's a decisive breach of that 25,000 print that we saw in the week gone by. But it's a hectic earnings week. It's been a hectic earnings weekend as well. But first, let's just quickly take a look at what's happening across the globe. Although the global markets and us have had a clear disconnect, and that was clearly established all through last week. But the setup this week, while of course, D Street has been flat, the global markets are at their life highs. Both the Dow, the S&P have had the best week of 2024. So US indices clearly scaling fresh highs, and the futures once again are edging even further higher as we speak right now. Oil, of course, has seen the biggest weekly drop as well. So that little bit of an aberration that you had about a fortnight ago, that seems to have also settled into place. But yeah, our markets in a different trajectory all on their own. Gold, of course, continues to surge, continues to see that all-time high pricing, and now it's sitting at $2,700 per ounce. So that's pretty much it. Wondering what our markets are going to do, whether are they going to align with the globe, or is the globe going to go quiet?
Siasha, it's a very divided picture. When I say divided picture, large part of the global financial market setup or global markets which really matter, they're continuously making a new high, and there are more earnings beat. Indian markets, they may have stopped falling, but there are earnings downgrade. So the week gone by, if you optically analyze from a market print standpoint, markets have stopped falling. Nifty is in a range, but the breadth of the market, the mood, the momentum, the excitement around earnings season, that really seems to be the missing link. So last week you just got lucky that despite earning a string of earning disappointment, market did not react in a very negative manner, but the underlying price action in the market, followed by the earning reaction, followed by the trajectory of the earnings, followed by the commentary, all of them are indicating that for the moment, the inertia, the mood in the market, the momentum in the market, all seems to be waning away. If global markets reverse, the question is that are we likely to fall much more? Because when the strength in global market is so strong and we've hardly piggy-banked on it, that just tells you that right now the problem or the center of volatility has shifted from global to local.
Yeah, absolutely. And I think it's well in the pricing. If you just take a look at how the global markets have done for the week gone by as compared to how we've done. Well, of course, Hong Kong was surely a weak shape, and that lost over 2%. Japan as well lost about 1.5%. Kospi was flat. Nasdaq higher by about 0.2. The CAC was higher by about 0.5%. Shanghai is the one which saw almost 1.5% kind of gain in the week gone by, as did the DAX, the S&P, the Dow, the Nasdaq, all well in the green, almost a 1% gain. And there you have the Nifty, which scaled down by about 0.4%. So I guess the proof is right there in the data as to how the markets have panned out over the week gone by, and a clear disconnect from what's happening, at least with the US equity markets.
Absolutely. So at about a 1-month low for the frontline index, and third straight week that we have seen those declines kicking in. For the week gone by, we've lost out about 0.5% on the frontliners, and the mid-cap index down nearly 1% or so. The banks that were up to their winning ways, well, they put a bit of a pause to that. So they put a pause to the losing streak, and now you've seen a little bit of a gain kicking in, a ditto when it comes to the PSU banks. So in particular, that cluster was rather active. And although FMCG continued to drag its feet, you also had autos which joined on the downside. So that as a sector as well was under a bit of pressure. So Nikunj, just talking about the kind of range that we're in, what exactly do you believe would be the market positioning at this point?
See, the path of least resistance is actually lower rather than higher. And you get the sum total of numbers. Not even I mean, barring one or two numbers, there is nothing wow about the earnings season. And we are almost 30-35% well past the earnings season. There is nothing new in the earnings season which seems to be indicating that things, at least on the growth front and on the earnings front, they are moving in the right direction. So we are going through this phase of the market where suddenly everyone is realizing that there is a huge disconnect in price and there's a huge disconnect in the underlying growth. You know, up until now, it was getting masked because of flows, because of global setup, because of excitement in the IPO market, because of participation coming from the retail investors. So that all, in a sense, markets are ignoring. But last quarter markets ignored it. This quarter, I think that is something which is the center talking point. So if you speak to any of the marquee market investors, the general mood with the HNI crowd, and purely based on what the strategy reports I've read over the weekend, there is no warrant for an earnings upgrade. And for a market where valuations were as it is stretched and FI selling is back, the path of least resistance in the near term clearly seems to be lower, because suddenly you are staring at a situation where the earnings actually could be at best in early double digit in specific pockets, and that is something which I don't think markets were prepared for. So if you frankly ask me that if you knock out the global setup from the current equation, then this market would have been really lower. The fact that we found support, the December low, the September lows, I beg your pardon, have been intact, I think we should be happy with it. Now Friday, if one looks at the Nifty, the market reaction was satisfactory. But I don't think Friday's price action should be constituted as a way how markets would move forward. We started lower, closed almost at the highest point of the day. We gained about 200 points, 250 points from the day's low and had a smart finish. But I think this will get challenged. My view on the market right now in the near term is bearish rather than bullish. Like I said, the path of least resistance, earnings, valuations, flows, mood, momentum, all of them is indicating that market should be headed lower with a downward bias, not like a sharp fall, but the grind and the pace would be slow, but the direction would be low.
And then, of course, there's so much number crunching to do from Friday evening up until the weekend. And let's first pick it up with the banks. Both Kotak as well as HDFC Bank came out with their numbers. And for HDFC Bank, the profit has seen an uptick of about 5.5%. The net income has seen a growth of about 10%. The gross NPAs have risen now, marginally so, at 1.36 versus about 1.33 for the quarter gone by. And the net NPAs as well have seen a slight bit of climb up to 0.41%. Provisions and contingencies, that's seen a drop and on a sequential basis. And the news, of course, is that HDFC Bank is looking to sell about 10,000 crore rupees worth shares of HDB Financial Services. It's going to be an OFS in the proposed 12,500 crore rupee IPO, wherein the fresh issue size is going to be about 2,500 odd crore rupees. So that, of course, is the big one. Although it's been a miss on the NII as per what the street was anticipating, though it's a beat on the core PPOP as well as the ROAs. For Kotak Bank, both the PAT as well as NIMs have managed to miss the estimates. So, you know, that's pretty much the picture from the two large banks. The underperformers, all eyes were closely linked on this. ICICI Bank and Axis, of course, have been in a very different trajectory. Axis came out with its numbers, which have already been a beat, and now wondering what the street's reaction is going to be for HDFC and Kotak.
See, Kotak is bad, as simple as that. There is a cyclicality which has hit Kotak, and they are trying to get growth back. Now, cyclicality because of technical factors, or cyclicality could be because of what the Reserve Bank of India, in a sense, has indicated or has instructed them to do after those, basic technology challenges. So, Kotak Bank numbers do not give a lot of assurance that the car is back on the track first. However, they made an acquisition, which clearly means that Kotak is now suddenly becoming aggressive in the unsecured category after they acquired that asset of Standard Chartered. So that will keep the market guessing. But purely based on these numbers and the acquisition, I think the stock is unlikely to do anything special. It may become a contra buy at some point in time for those who say, okay, this is a cyclical problem, they're getting the mojo back, eventually they will be able to fix their problem with the Reserve Bank of India, and then the downside gets limited and restricted. So Kotak now I think is falling in that category where you're a patient buyer. You can sit out through next 2-3 quarters. You may just end up getting a stock which may outperform the market, but I think the outperformance will start in next calendar year, not in this calendar year. Till that time, patience, or you'll have to sit on it and digest some underperformance. HDFC Bank, completely different kettle of fish. It's work in progress in my book, but markets knew that this work in progress was coming. They are looking at listing their subsidiary, which adds a positivity to the stock, because that in a sense will have an impact on the sum total value of HDFC Bank. They still need to retire their old loans, get growth back on the track, and I think what they're doing progressively is in the right direction. But that is work in progress. It's a very old, very well-owned stock, very well-discovered stock. Everybody knows it's cheap. Everybody's waiting for it to start. But I think markets will wait for evidence for HDFC Bank turnaround, then rather than making a view preemptively. In Kotak, you can make a view that 6-12 months out, the stock and the business and the bank would have turned around. I'm very confident of that. HDFC Bank has to turn around, then markets will say, okay, we knew this was watching, we only own the stock. With Kotak, it's a different approach. With HDFC Bank, it's a different approach. Bottom line, both these stocks right now are not going to give you great returns. And I don't think a reaction like Axis Bank is coming for HDFC Bank or Kotak today.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.